Okay, hello everybody, and welcome to the latest UCast. It's our quick look through, or maybe not so quick with all of these miners. Look through all the miners that I have on this list, and we'll take the longer term view and just see where we are. So we're going to work our way through alphabetically, and we'll hit the uranium ETF, and we'll also hit the spot price of uranium at some point down this list as well. So off we go with Alligator Energy, and you can see, much as per my previous UCast podcasts, pretty much what I expected to happen has happened. We've peaked and got up to whatever it was, around about 11-12 cents, and very far extended away above the edge of the arc. The arc edge, little tricky to determine exactly where it's going to go at the moment. It can be extended out a little bit, or it can be extended in a little bit until we get this pullback and another confirmed arc touch. It's going to be impossible to say really, but the edge of the arc is a long way down. Not necessarily saying it's going to come all the way down and test it, but it's certainly within the realms of possibility. So Alligator Energy is very precariously balanced at the moment, so I'd be careful with this one. It's well extended and hasn't really come back to back test any of these sort of key levels lower down here. So I'd be surprised if this carries on much higher, if at all higher, before continuing with its consolidation. Not to say that it won't go much higher in the future, but for now, more risk there than reward, I suspect. Anfield Energy is in a better position. It's not too far above its arc. A little bit of leeway with the arc here as to where we place it until we get another touch on the right hand side. We won't know exactly where the position is, but we've got a rough idea at this point in time. Price currently at 12.5 cents. The arc edge is down at around about 8 cents, so less in the way of downside than we saw there on Alligator, and we could just see further consolidation for a while before breaking out. There's an important breakout line here that we need to get above. We spiked above it and got back down below. This is the monthly chart, of course, and we need to get above around about 15 cents, 16 cents, that kind of area, and then we've got a horizontal resistance level around about 18, 19 cents, that kind of area, perhaps 20 cents that we need to break through. So a break above that 20-cent level will really signal that this bull market is stepping up another gear. Okay, Azaga Uranium. Let's have a look at Azaga. It's hit my arc target. I expect it to come back and spend some time in the target. Get rid of this big word target there. We don't need that. I'd expect it to bounce around in this target area for some time now. I'd be surprised if it just continues higher and higher, but stranger things have happened. But my expectation is a bit more I don't know if it's pessimistic or realistic, whatever you think, but this pattern would suggest perhaps a back test to the breakout level, which is around about 3.5. Is that 3.5 cents? Yeah, around about that sort of level just there. Okay, Bannerman Energy. Well, you can see from the annotations that I've got on here, and I've shown on previous podcasts, that I'm expecting some kind of pullback either to the horizontal support level or possibly to the arc. Time will tell, but it's very far extended above the edge of both of these arcs, and there's two arcs there in play. There's an inner one and the outer one created by this wick here and this wick over here. So my expectations would be pretty on the downside on this one, I'm afraid, for some time. Just being realistic about it in terms of the technical analysis. Of course, it could continue higher for a while, but I think we need to work off some of this bullish excess. And this is down to here is at least another 1.5 years. So we could have a long period of consolidation going on here after this burst up. So, we've got a long-term bull market going on, but just urging some realism over the coming 12 to 18 months. Blue Sky Uranium. Blue Sky looks better placed to make some advances over the next 1.5 years or so. That's why it's in the Gambler's Picks, of course. It's close to the edge of its arc. got some good arc touches on the left-hand side and also on the right-hand side now. So perhaps a higher degree of confidence in this one, and a higher degree of confidence that it's not going to fall too far. The edge of the arc somewhere down near 20 cents, currently 28.5. So just expect some downside pullbacks on this one, but perhaps not quite as much as some of the others. So that's how that one's looking. Boss Energy has hit its target, and I'd indicated here a period of consolidation and pullback. So Boss Energy, it's done very well. It's moved up. Well, its low was back in 2013, and it's moved up thousands of percent from there. So it's only sensible that it takes perhaps a breather after this. I mean, it consolidated for a long period here, a couple of years, 2 or 3 years. And in the last 18 months, it's moved up from 0.035 to, well, it went over 0.35 there, so over 900%, 1000%, that kind of thing. So huge moves. Time to cool off a bit, I think. Cameco, similar thing. It's got a long way above its arc. Even this smaller inner arc here, it's got a long way to fall to retest the edge of that. So these are all long-term plays. You can, take profits when it spikes like this, wait for it to retest the edge of the arc at some point in the future. But I'm playing the long game on these with all of them. So this one I'd expect further downside for some time to come. Canalaska Uranium, well, this one has moved up from around about 10 cents, 9, 10, all the way up to 60 or so. Went above that, of course, up to 80, 85, something like that. So we're probably going to find ourselves a bit range bound for a while before the next move up. We just need to monitor this upside breakout level around 8.5 cents. But until then, we're likely to be, as I say, not going anywhere for a while in terms of the big picture. Consolidated Uranium, same story, very extended above the edge of the arc. Conceivably could bring the arc edge in a little bit, but until we get another test on the edge of the arc, it's a little bit uncertain whether we're putting the arc on the spike or whether we're putting it on the candle body there. So I'm just being cautious with its placing, and we're just on a horizontal support and resistance level here, or support and resistance zone. Maybe put it in that position there. So give it the benefit of the doubt at around about 250. Would that be 240, 250? Get that right. Call it 240. 239. It's in that area, isn't it? So it'd be good to see that level hold. If not, it's probably going to slide down this support line down towards $1.66. Centrus Energy has had some lovely moves. Seems to be confirming an inner arc here, but there's a possible outer one as well. So just a word of caution on that. They're all heading upwards, of course, in the longer term, in the next few years, into the mid to late 2020s. So it's a long-term prospect, this one, which should bring some very good gains, but it's going to take some patience. Deep Yellow. Well, when we broke out here, I drew this pullback flag. It's what often happens. You kind of break out, hit a resistance level, and then pull back to the edge of the arc. So that was my sort of envisaged roadmap. So into around about this time next year, and then consolidating and moving up. So we're currently at 92.5 cents, pull back to perhaps around about 40 cents. That'd be a 50% drop from where we are now. Nothing at all unusual in the uranium sector with that. 50% drop, and then who knows, maybe a 200, 300, 400% move up, something like that. So Denison Mines, again, hit the edge of the arc back here in around about a year ago, spiked up enormously, and then it makes sense now to come back down and test the area, perhaps around about $1.15, $1.20, that kind of thing, and give us another arc touch in around about a year's time. Encore Energy hit its arc target, expecting some kind of handle on this one. I think when we look at what's happening with the rest of the sector, it would make sense for this to pull back over the next 12 months or so and consolidate this huge move up. You just can't keep on doing this forever. We've moved up thousands of %. So time to take a rest. Energy Fuels, the inner arc, we've hit the top of the inner arc, likely to come down, perhaps test this apex and the edge of the arc, this area around $4, what would it be, $4.40, that kind of area. So that would involve a drop of around about 40% or something from where we are now. Again, nothing unusual in the early stages of a uranium bull market. Lots of buying opportunities in around about a year's time when this all happens, by the way. Fission Uranium is in a, it's actually a bearish rising wedge, this. I expect it to sort of guide us up for quite a period, and then it may well break down during, at some point when we have a sizable pullback. This is likely to break down and find a support level somewhere. So we've just got to watch this support line on this bearish rising wedge somewhere around about the 60-cent area at the moment. So a little bit of caution there. This was a bullish descending wedge here, and we've reached its target and now pulling back. So all we can do is sit and watch on that one. But Fission Uranium, along with all the rest, it's a long-term prospect. Forcis Metals, if that's how you pronounce it, does look a bit like a bull flag on this that's forming, which is interesting, which may want to take it higher before pulling back. But this could also, of course, just as easily break to the downside and come back and test the support line and the edge of the arc somewhere around about 14 cents, which would be a huge drop of whatever it is, I don't know, 80% or something crazy. Seems a lot, doesn't it? So perhaps the edge of the arc comes in a bit to here, and we use the candle body rather than the wick on the candle to test the edge of the arc somewhere around 20-25 cents, something like that. But that's still a huge drop if that were to happen. Maybe more of a sideways move to the edge of the arc. But there's no way of knowing with this until you get a breakout or a breakdown. You'd have to look at you look at the, instead of the monthly, you'd look at the weekly time frame, find your support and resistance levels, and that would give you a clue as to whether we're breaking up or breaking down. There's your support level there. It's around about 62 cents. So a breakdown below 62 cents, and you're going to be coming back down here. All I can say on that one, yeah, and a move above the resistance level is around about $1. $1.13 would signal further upside, but that's a lower probability for me at the moment. Global Atomic, bearish rising wedge. We're still in that. So they're designed to hit the upper resistance line, then come down, test the support line, hit the resistance, test the support. So at some point we'll be back down here testing the rising support line. You can see the sort of price levels would be around about $2 to $2.50. We're at $3.22 at the moment. So keep an eye on that for opportunities. Yeah, that's looking to see if there's any other kind of way of reading that at the moment. It would take a breakout above this line or below this line to cause me to reassess it. There is perhaps a little bit of a bearish arc in there as well, which let's see if that fits. Does that fit? Kind of. We'll see if that plays out. You see it had played out down here, I think, to some extent. So a bit of a pattern going on here, which may well bring us down to this area around here, around about $2.50 or just above, if we stay near the edge of that arc before the next move up. Something to watch. GovEx, well, my suggestion was that we would move up from the breakout and then come back down, and we've moved up from the breakout and we've come back down quite sharply, actually, more sharply than I envisaged. But nevertheless, I would expect perhaps a little bit of sideways action here, rather than just dropping straight the way down to 28 cents. It could do. It could target that area where the resistance zone meets the edge of the arc. It does happen quite often, around about 27.5, 28 cent area. Or it could test the edge of the arc a little bit higher up, somewhere here, around the 30 to 35 cent area. So we'll see. But there's no need to be rushing into buying more uranium stocks at the moment. Global X Uranium ETF. Told you we'd hit the ETF at some point, and there it is. So we're down from 28 to 24. So that's it's about 15% now. I think we've recovered some of the initial losses, but I think likelihood is that we'll trend downwards. Obviously some possibility we see a little bit of a further move up before coming down, or we just come down and test the edge of the arc. But I think looking at it in the longer, the bigger picture, if I put the monthly chart back on, still on the weekly here, there's the monthly. So bigger picture is that we need to have another arc test at some point. That'll be the time to load up. Just wait for that. You can see it is an arc. We've got nice arc structure going on. Slightly awkward candles on the left hand side there, but I don't think that really changes the overall idea that we have an arc in play here, and I'd fully expect the edge of this arc, as they pretty much always do, to be tested and the next arc test, if we can judge when we get the arc test, because of course there's a spike there which could put the arc down here somewhere, so we have to be a little bit cautious and just look at that in more detail when the time comes. But I'll leave it on the spike for the moment, just as a worst case scenario. Okay, ISO Energy hit its arc target a while back and has continued upwards as the rest of the market has moved upwards. It's a bearish rising wedge. Be nice to think that it could hold inside the rising wedge at least the $3 area, but time will tell. Just have to monitor that area there. If it doesn't hold, then we're looking at probably the top of the arc at $1.50 or thereabouts. So again, no rush to be adding to positions at the moment, nor with Laramide Resources. Laramide, just checking their market cap, 125 million. It's not a particularly large company, and so may display a fair amount of volatility, but a lot of these uranium stocks do, of course. The edge of the arc is down either near the 35 cent area or down near the 25 cent area when we get down there. So it'd be very normal to see the price come down there before advancing further. So again, wait for the next arc touch before jumping in with that one. Lightbridge, well, a little bit tricky this one. I'm speculating that we have an arc forming. Looks like we do. If that's the case, sometimes price skips across the base of the arc and puts in an arc touch on the right hand side over there somewhere. Don't know what's going on there. I just knocked it by mistake. There we go. But realistically, the edge of the arc is quite a long way below us, and you need to wait for a breakout above one of the important resistance lines. I'll just put one in there because I think there's probably a resistance line. Yeah, there is in that area there. So until you break through that, and more especially through this horizontal resistance line, then I wouldn't be getting too excited about Lightbridge Corporation. Mega Uranium, a long way above its arc edge. It's hit its target. You can see the measured move from the flagpole, breakout, measured move, job done. Next logical thing would be to come back down to test the support line around about 18.5 cents, or the edge of the arc, which would be an amazing buying opportunity wherever it hits the edge of the arc. NextGen Energy pretty much hit its arc target, even though we've only got half to 2/3 of an arc there, because price history doesn't go back far enough. But regardless, it's in that top right hand zone. So I'll be watching that, and I'll be watching this support area here as well. to see what happens. You can see how we fell out of this channel. In fact, I'll get rid of the channel now. I don't think it's going to be particularly relevant. Get rid of that. Get rid of that. All we need to watch now is the edge of this theoretical arc as it plays out. So somewhere down to perhaps around about $3 would be a reasonable pullback expectation, maybe. Nothing else to say on that. North Shore Global, expecting a handle to form on this half of a cup that we've got, half of an arc. A little tricky with this one because it doesn't have a huge amount of price history, but yeah, no reason to expect that to continue marching upwards just yet. So we'll monitor that one in the context of the rest of the uranium market. Pure Point Uranium, that one has had a large move from down around about, what's that, 2.5 cents up to around about or almost 20 cents. So hundreds of % gains there. Now we're consolidating that move above a sort of support line, which is somewhere in the 9-cent area. So pull back to that 9-cent area wouldn't be surprising, and I wouldn't be at all surprised to see it retesting the arc at some point in the next year or two. Paladin Energy, same deal, big move, looking for an arc test. Regardless what people are saying on Twitter, I wouldn't be getting excited about this at the moment. The big move in uranium has happened for the time being. Now we've got a long period of consolidation like we did here, where we had a year or more of consolidating and finding the edge of the arc. Same thing, all normal stuff. If you got in down here like I did in this area here, just sitting this out, it's no problem. But if you got in during this last move, it's going to be frustrating. But anyone finding themselves in a loss position, it wouldn't be, in my view, the best idea to be selling at a loss, not when big moves come ahead. I mean, you could redeploy your capital elsewhere and benefit from gains. A lot of people do that, nothing wrong with that. Time these spikes and then be aware of the arc edge, take your money out, put it back in when the arc test comes. Sky Harbor Resources, and you can see it's been contained underneath this resistance zone, 56 to 72 cents, and a couple of possible positions for the arc. Could be anywhere in between there, but that's the tightest arc and that's the largest arc. So you can see much higher targets. Considering the target and the target time, I'm more than happy to just play the long game with these, but everyone's got a different strategy, of course, so we'll just alert you when the arc tests come. But until then, actually, there's really nothing more really worth updating as we go. We go through the next few months on these, unless something dramatic happens. I think we'll probably be tending to focus our thoughts elsewhere. Standard Uranium, big spike up, huge move down. Nothing really to see there for the time being. UX Corp, same deal, big move, looking for an arc confirmation arc test with a couple of possible positions for the arc edge down around 18 or 18 cents, perhaps. If we do move a little bit higher, come back and test the area above 30 cents, and the outer arc is much lower than that. UR Energy, so we had a down tilted arc here, courtesy of this down tilting resistance line. Got ourselves into a bearish rising wedge, which I would expect to see breaking down, and it really would make a lot of sense to come back down and test this area around 80 cents or so, which would be less than half the current price. Uranium Royalty Corp, not a lot of price history on this, so I'll put it onto the weekly. Let's see a bit more. So is this going to be a large arc forming? We've got this small arc, hit the target ahead of time, coming back to test the support at the top. But if this is the beginnings of a much larger arc, then we can expect to see the price fall by more than 50%, more than 60, 70% before taking off again. Nothing to say that this is definitely going to happen. It's just me imagining this is the beginnings of a larger arc. bit unusual that the price would spike up like this at the start of an arc. So perhaps not overly probable, that outer arc. I'll leave it there for now, but I think that's a low probability scenario. We could find ourselves with, I don't know, I was going to say something a little bit smaller, but still, you don't tend to get a spike up above the arc as it's forming at the beginning. So I have to give that a little bit more thought as to what chart pattern is forming there. But again, for the time being, there's nothing too much to look at there. This is the spot uranium, which got everybody excited when it broke out. I'll just put this onto the line chart because it's a bit easier to see, I think. Got everybody excited got me excited as well when it broke out above this rising channel. It's not good news that the spot uranium price is back inside the rising channel, and it suggests we've got a lot more grinding to do towards the edge of this arc over the next year. We need to get back up above, well, it's going to be this horizontal resistance zone around about the $41 area. So keep an eye on $41. If things start to move up again and spot uranium gets back up above $41, then we can start taking another look at the arcs and the individual miners and taking a closer look at where they might end up. I mean, the target on here is up above $80 in 2024. So all these miners should be turning up, I would suggest, no more than 12 to 18 months. But it's all open to adjustment as things unfold. That's just current expectations. Uranium energy, put it back onto the candles on this one, and I put it back onto the monthly chart. In common with all the others, much higher targets, as you can see there, in coming years, but for the time being, we've spiked a long way above the arc. We've broken out of this bullish descending wedge as well, putting in some nice arc touches along the way, possible outer arc there. Well, we've got the inner arc we've already sort of moved up out of, so this larger outer arc, should it begin to come into play, does suggest that a drop of around about 60–70% is quite possible to retest the edge of the arc or even the breakout of the descending wedge. So caution on that one. And Western uranium, well, you might remember this from previous ucasts. I'd put this pullback triangle on top of this large move up. You get a big move up like that, you'd expect a big consolidation, and this takes us into the end of next year, so at least 12 months from now, 12 to 18 months. And let's see if we just do stay within this red triangular zone and pull back to the edge of the arc. Again, a bit of a messy arc. We've got candles here that are, well, there's a secondary arc, isn't there? I think so. I mean, you could even put it there, and you could put an arc there as well. There's a variety of possible scenarios here. Depends whether that wick is going to exert its influence or not. So we'll bear in mind that possible closer in position as time goes by. We need some touches on the left-hand side, don't we? I mean, it's not really a very happy arc, I don't think, that one. I'll have to do some more work on that, I think. See how far that pulls out. Yeah. Just put it down a little bit to there. It has to go to there at least, I think. So that's a better position for it. So that's a warning, isn't it? If price came all the way down to here, that'd be a drop of 50% or so. And if it came down straight from where we are now, then the drop would be more like 70% or so, or even 80%. So lots to keep an eye on with this. But I think the overall message you've probably got is just patience. Don't be, you can take profits. Well, perhaps taking profits about 3 weeks ago when I first indicated the pullbacks were likely, that probably was the place to take profits 2 or 3 weeks ago at least. But otherwise, hold tight, add to positions when the pullbacks are completing, and benefit from the next leg up, which undoubtedly will come. But we're all going to need a lot of patience. Okay, that's it from me for now. Thanks everyone for watching and listening, and speak to you again soon.